Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Monday, July 7th, 2025. Title this one, Tariff Tantrums Reprise. As we had good news and bad news on the tariffs. We had love letters from Trump to a number of nations informing them of what their tariffs are going to be. Interesting way of doing that. And at the same time, we had a kicking the can down the road, as we predicted, to August 1st for them to start. So giving plenty of time for more countries to come and negotiate with the Trump administration. Should be interesting. Again, my email is marketmripro@gmail.com. I have a Google group, which is what I use for inviting people to education programs. I give extra discounts. Sometimes I don't post on YouTube. And there's no cost. And if you join and you want to buy my tools, you get an extra discount. So why wouldn't you want to join? And you could select how often you want to be notified. So let's take a look at what we saw today. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and your loan are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. If you have questions about chemotherapy, you can consult with me because I'm a cancer doc. But I am not a financial advisor, and this should not be considered financial advice. I love trading options. I did a little blurb about them over the weekend, but I certainly recommend that you get educated on options before you take trades. And I've got tools in multiple platforms, and I'm an independent trader. I mentioned my Google group. It's called Top Down Trader. It's free. Just go to Google Groups, sign in, click on all groups, and find the one you want to join. It's called Top Down Trader, and then it'll ask you how you want to be notified, and you're in. So on Thursday night going into Friday, since it was a 4-day week, I put up a couple of charts that I thought said we would pull back on Monday. This was one of them. It showed that we now had over 25% of the stocks in the S&P 1500 were above their Bollinger Bands, and 83% of the stocks are above the midline. This 24 date, that's just when I last refreshed the list. I probably should refresh it again, but it won't change much. So this is what we said, and I said, when I see this in an uptrend, it tells me I'm getting ahead of myself, and I expect a pullback. Well, where are we at right now? Well, Market MRI Pro this wasn't working Thursday. It's been fixed, and you could see the stocks above the top Bollinger Band and the second one at the top both came down as the market shifted to the left and gave up much of their, quote, overbought status. The other thing I pointed out is the 13-week new high, new low, which I've now put inside of Market MRI Pro, tied to various indices. But this one was so beautiful, I couldn't resist it. And what I really liked about it was it showed that in white, the 13-week new high, new low ratio hit this white line. And you'll notice something. Every time it hits the white line, it pulls back. And the majority of times it does that, it is associated with a top in the market. So when I saw this at the end of the day Thursday, it was pretty clear to me that we were topping, at least for a very short time. I don't know if we're done pulling back. We could be. And what happened today, you could see this line came down hard on Monday, and the S&P 500 turned back from a high. Now, when it hits the one on the bottom, typically it's a very meaningful reversal. When it hits the one on the top, especially in a bull market, you get a pullback of sorts, and then you keep going higher. So the question is, how many days will we get a pullback? Futures right now are down a bit. Dow's down 94, NASDAQ 21, S&P about 10, and the Russell about 4. So a little bit of carryover from during the day, but nothing severe. Know your news and earnings. On Tuesday, we got optimism index for June, so it's backwards looking and really backwards looking consumer credit. I'm sure everything will move the market. Wednesday, we got the Fed meeting minutes. That's probably more important. And then jobless on Thursday. Not much earnings going on right now. I think the big one to me here is Delta. No, I don't own it currently, although it did get upgraded today. But to me, that usually triggers the new season of earnings. And in the lower right-hand corner, I'm sticking to my comment. It's a judgment call to hold stocks over earnings dates. It is just bad judgment to not know when your stock's earnings date is scheduled. We put this index together in early June at the live meeting in Orange County. It ran up a few days and then it started basing, kind of gave a little bit of a cup and maybe a handle. The reason I put this together is by something that Ian taught us, which is why we call it an IANDEX. And what he taught us was that when the market breaks down, typically the leaders will break first. So you build an index of leading stocks and you look for it to roll over, and that should give us a signal. Well, it's not rolling over, it's actually at all-time highs. So that tells me we're going higher and that this may be a shallow pullback. Hope so. I did a number of things over the last couple of weeks promoting Market MRI Pro. This is a freestanding program that one of my followers, Praveen, developed. Kind of took everything that I do, and together we built a program to really make the workflow easy. It retails at $19.99 for the first year. It's an application. It is not an indicator. And then it includes data with real-time updates, but not streaming. Annually, after the first year, it'll be $5.95 or less, depending upon how many users I have. And then you get discounts. I have a $300 off to anybody who purchased it before July 11th. $100 off for anybody who joins or is a member of the Top-Down Trader Group, so that's $400. And a number of people have bought my tools inside Wealth Charts. I have a special tool and trade station. They get $200 each, so you could get as much as $800 off the first year. If you are currently a trial user, I did send out invoices yesterday to everybody who I had not sent invoices before. Several of you wanted to buy it, and I said just take a trial and I'll send you an invoice when I had a chance. The trials will turn off, as well as the offer will expire at midnight on Friday night, July 11th. I'm doing a training session Saturday from 11 to 1. It's really designed for the owners and trial users of Market MRI Pro. However, if you own my tools on any platform, you're going to see my trading style and what I do is exactly the same regardless of the platform. So come and join and you'll see what I do. And I'm only going to share the Zoom information in Top-Down Trader. So everybody that owns my tools is already a member. If you'd like to find out more, join my Google group. You could always cancel if you don't like it. And then again, for any information about Market MRI, from how you use it or problems, issues, coding at Market MRI Pro will get you Praveen. If you have any other questions, interested in purchasing, email me at marketmripro@gmail.com. And why not join my Top-Down Trader Google group? Let's go take a look at the charts. So this is my daily daily briefing, I should call it, report. And this is on one of my computers pretty much all day long. And because it gives me a sense to understand the ebb and flow of the markets. Upper left-hand corner are some of my favorite ETFs representing volatility, which led. The dollar, which bounced, it's been down for a while. You can see over 5 days it's been up only 0.19, which means the rest of the days were down 0.14. And then you could see we ranged from minus 0.75 on the spiders and Qs to minus 1.5 on the small caps. The diamonds minus 0.91, and Bitcoin was down 1.27. So I know it was a weak day in the U.S. markets. I look over here on the range, and everything finished around the middle of the range to the bottom quarter, which is weak. Although you like to see the volatility closing well off their high. That's a good thing. When we look at the new highs minus the new lows on the NYSE and the NASDAQ at 12 months, not a lot of new lows. And so you're staying about almost at 100 on the NYSE, and the NASDAQ's plus 71. It took a while to get the NASDAQ positive. That's still a good sign. New highs in the market are built upon new highs, not on new lows. If you look at the S&P 500 sectors, you'll see the only two that were positive were utilities and staples. This is the S&P 500, not 1500. If you look down here, you can look at various themes, and so you'll expect defense. And you saw silver, interestingly, let's make sure, you got China, aerospace, defense, social media, gold, uranium, and Dow Jones Internet. The rest of the market was negative. And if we pull down to the bottom and we look at one-day change, lithium, robots, blockchain, self-driving cars, some of the things that have been moving of late. And you could see, for example, 50-day performance on blockchain's been up 48%, 22 on robots, lithium only up 6.84. But rotation out of the leadership. Was this a one-day wonder and brisk market rotation, which we could see here instead of a crash? Or is it just a defensive day? Time will tell. Over here, the key thing is percent advances, 14% in the S&P 1500, 27 in the NASDAQ, and 22% in the NYSE. Just saying that at least 3 out of 4 stocks in the market were down on Monday, which probably reflects a negative day in your portfolio. If you look at sectors and indexes across the board, what we saw on Monday were demonstrably lower than they were on the prior session. Now, I talked about overnight, Sunday, I talked about, let's take this one off, I just added this. I talked about GTLS as something that I was interested in purchasing on Monday. But I also talked about how I take the trades. Why was I interested in purchasing it? I really like this breakout here. All right. When I looked at the fundamentals, I like seeing the growth rates, surprises. All right. So earnings are growing. We were looking at 262 versus 218. So there's some growth there. So I like that. And so I looked at it, earnings are out to August 1st. I said I'd take an August option position and reevaluate before the options day of whether I want to hold into options or not. Excuse me. I also told you that my style of trading, remember this is the day we were looking at. Maybe I'll put a vertical line on it so that we can remember that. So my style of trading is not to wait for it to pull back and buy it. I often have to set and forget, meaning I set a conditional order to take a trade in GTLS. I said it had to trade up to I think 173.75 for the trade to get placed, and then I was going to put my stop in right here, a little bit under the 200-day moving average. So no harm, no foul. We never traded into my buy zone. Trade wasn't triggered. Now I'm not done with this stock. So now I looked at it and I said maybe if I really want to get into this stock, maybe this isn't the trend line anymore. Maybe this is a trend line. And so now I'll be looking for the stock to break above this trend line. Ultimately, breaking above here would be even better. And I may enter it later, but my trade is off. And again, I presented this prospectively. I'm not just making this up. I don't buy something unless it moves into my price. One that I got tricked on today, but also not any damage, was AGEN. And AGEN I looked at over the weekend. And again, let me just move it over here. And I'm thinking, boy, that looks great. Nice uptrend, pretty significant pullback, breaking out here, two blue dots in a row. And then news came out this morning, and I actually put a little blurb in Top Down Trader that this was interesting to me because they have a new treatment for colon cancer. And at a meeting in Europe, a GI meeting, they're presenting their data, and frankly, their data is exciting. So what I did is I looked at it, and I put a conditional order up, kind of right the high of the session there. And then I watched it during the day, and it never got there. But when it dropped below $5 here, I did put in an order. And I put in an order that I will refer to as a lottery ticket. Why is it a lottery ticket? The company makes no money. I don't know how they have revenue. They must have licensing. Their market cap, here it says it's about $58, $60 million. I saw somewhere else it was $128 million. Typically, if a cancer drug gets approved, even if it's a crappy drug, you're going to get a market cap of 400 million. So to me, there's a big upside. Now, there's also a pretty high chance that the next trial is negative. But it's one that intrigued me. But again, by setting a buy stop above the prior high, nothing happened to me. And again, I do that for a reason. Those who followed me for years know why. I have a full-time job. I am the leader of a leader in a company with over 3,000 employees in the healthcare tech space. And even though I've got charts up on my computer in my lovely office overlooking the Intercoastal down here in beautiful, sunny, and often thunderstorming West Palm Beach, I still have to work. So I will find things tonight if I like them. I will put orders in, but they have to move into my stops or else I don't get filled. So let's take a look at a couple other things. We look at my timing model, no changes. Daily remains in a buy. And if you look at this, was there any damage done today? Not really. We got little bottoming tails on everything. I like to see that. Maybe you come back another day before you rally. Your WMA is intact. Your weeklies certainly didn't see any damage if the daily didn't. So both the daily and the weekly timing model still tells me I should be long stocks. So let's let this catch up, and you can see we're just looking at the buy-sell line. All right, then I'll go look at the U.S. index ETFs. And here I'm going to blow them up and look at them deeper. So let's pull them up one at a time. Here is the spider. So a couple things on this chart. So the spider was down 0.75. Now, I have put on this chart what looks like 10-year seasonality. And isn't it interesting, on the 10-year seasonality, it would say it's going down tomorrow, and then it's going higher. And I think that could happen. So I'm not ready to give up on this rally. This has been a hell, or heck at the least, of a nice rally, a V rally. And even if it pulls down into the 17-day, nothing's broken. So I'll look for 613 to hold, maybe another couple days down. But again, can this market go higher from here? Why not? Could it reverse further? Absolutely. And I'll be watching out for it. The Qs, just off all-time highs. You can see a little stutter step maybe tomorrow and then higher on the seasonality. Pulled into the 17 and ran up. What would be wrong if it pulled back to the 17? So I guess one thing that's concerning is volume looks like it might have been a little higher today. But I showed you those slides in the preamble in my PowerPoint because I wanted to call out that this market was ripe for a pullback. We knew the temper tantrum was coming. Frankly, the futures Thursday night into Friday morning were awful. And the market opened up much less bad than it appeared if you looked at it on Friday. Volume was high in the markets today. I just looked at it right now. So, and that would be one negative sign perhaps. But my guess is we pull back a little bit more and go higher. So that's the Qs. What about the diamonds? Now the diamonds, where the first two already hit all-time highs, the diamonds were close. Um, the diamonds were, gosh, 450 to, gosh, they were within 1% or so, 1.5% of all-time highs. And they had a negative day today as well. Again, seasonality is interesting, pulling back for a day or two, and then it goes higher. Again, is anything broken here? No. All of them have come off the high jump being, getting to a nervous area. Now, the weak sister in many ways has been the Russell 2000, and we could see that the Russell today was down 1.50. The big down guy also has positive seasonality, at least for a little while. Did anything break here? I ask you. No, you had a CPR downside fire. That's a fast moving indicator. It could be over. It could be dropping. But boy, I got the 200. I got the 17. I got the 50 underneath. I bet I could come in here and probably find a trend line that makes sense too off the bottom. I think you've got a ton of support in this stock, so, in this ETF. So my guess is we pull back another day or two, and I still think we could go higher. That is what I think today on Monday night. I'll let you know what I think tomorrow night. It could change. If I look at the VIX, it was up 8.61, the VIX, the futures, on Monday, and the dollar bounced as well. Now this trend line has been holding. See if I think I have to use a different. Let's see, that'll do it. I guess I'll go right there. So haven't taken out that trend line up a third percent and really bouncing off of the bottom. Maybe this is an undercut and it rallies off the prior lows. If we look at commodities, you'll see a mixed bag. You'll see that gold, which was down on Friday, was actually up a little bit in the market on a little being the key on today was up 0.08. It dropped hard and finished above. You look at silver, it dropped hard and never recovered, down 0.24. Oil trying hard. That surprised me because OPEC came out and said that they're going to be pumping more oil, and that usually is bad for oil prices. But then, perhaps people think the economy is going to be better than they thought, and therefore oil had a little bit of a bump. Again, little being a key word, up 1.72%. Natural gas is just dead. And then if you look at rates, make that bigger, not that, hold on, let me go back here, the old Control-Alt-Delete from my charts is you just go and you find that little thing here and it resets. Both the 10-year and the 30-year were up. Interestingly, taking over their 50, 1%, 1.08 on the 10-year, 1.5% up on the 30-year. Hopefully, you don't see this go up too much higher because when it gets to 5%, the market gets very, very unhappy, and it closed at 4.93. All right, let's keep looking. Buckets, I showed you the S&P 1500, but that pattern of shifting to the left and coming off overboughtness was everywhere. Market breadth will show big bottoming tails on the NYSE and the NASDAQ, which is, to me, a positive finding. Doesn't look like the volume was massive on the NYSE, although over here it says it was up, so maybe the volume isn't done coming in yet. You can see stocks above the 50 in white, 20 in green, and 200 in red turned down a little bit, and then we're approaching kind of overbought areas. And if we go down here, new high, new lows remain positive, but AD lines and up-down volume were negative. There was no signals down here. And then the other thing I mentioned, we have the 13-week new high, new lows now in our program. As you can look at each of the major indices. Let's make them a little bit bigger. All right, hit the reset button. And let's just type in, I only want to, let's type in 60 bars. All right, and what you can see, each of these, you can see the percent. It went from 100% down to 95. 87 on the NASDAQ composite. The first was the spider. The S&P 1500 dropped to 94 and 92 on the Russell 2000. So we have eased off those extreme overbought conditions. When we look at ratio charts, which are, except for the upper left, are the S&P 500 sectors versus the spider, and what I'm looking for is where there's strength. And you know, technology's been the leader, and I'm still on. I would say tech is the strength. Financials may be trying, and industrials have been holding up. On the day, defensive things like staples turned up, utilities, maybe real estate and healthcare, but laggards are laggards, and I just think it was some rotation there, maybe some safety running in case the tariff taper tantrums go on longer. But I don't think anything there has changed my thoughts on the market. Then I go to the JAS layout from a top-down perspective. I have a universe right now of 3,691 stocks. And if I look at the leading industry groups and sectors, you can see utilities, which was flat, cyclical, which is actually discretionary, and then communication services. And then we'll add for defensive, which is staples. Now, that looks totally different than the S&P 500. And it's no surprise because it includes all those 3,691 stocks are put into sectors and industry groups. So it is a very, very, very broad index. All right. Or broad sector. Then over here you now have the industry groups from those top, and we can rank these by percent, and we can look at renewable utilities, travel, general, grocery, apparel, and then we can rank the stocks here. So we got 191 in the top 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And let's take out things that are less than $5 and 500,000 shares. And that'll leave us with 117. And there's a number of ways that I look at this. One thing I like to do is I might rank them by percentage move. We'll do that tonight. Let's just go off the top 10 and look at them. ASST, Asset Entics, Communication Services. Well, I got to pay attention because it had momentum breakout and volume. Look at the volume here. It's a cheap stock. Relative strength and OBV look good. It's not extended. I dropped the earnings down, and it might be a IPO or something. That's not, we don't have any fundamentals. And let's look at news. First, publicly traded asset management, Bitcoin Treasury for $8 per share, strong buy. This is back 530. All right, so this is an ETF or an asset entity of Bitcoin. Okay, next, this one looked interesting over the weekend, and I thought this thing must have had a big split because I could have sworn it was a much more expensive stock. Advanced Auto Parts had a big gap up here in volume, and this was on the 22nd of May. So let's pull down here. And so May 22nd, interestingly, they missed earnings with a lot of, well, let me say it differently. They had negative earnings. Revenue both decreased from prior quarter, so that would have been versus this quarter, but big surprises. So the market expected bad, and what they got wasn't so bad. And this thing's trying to break out here. Seasonality is interesting. That looks okay. Chef, I left this open, so earnings here not to July 30th. I'm always going to look to see if there was news. 10 under the radar, consumer goods stocks with incredible growth potential. Okay, well that's interesting. Look at the earnings per share growth, good revenue growth. I like this, a nice space, out of a squeeze with momentum breakout and volume, good relative strength in OBV, and not overly extended. So this might be one to take a look at. Now seasonality looks kind of nothing, not anything great, but technicals come first. Next, TCOM, TripCom. This was one we looked at um, over the weekend, and I still like TripCom here. And this is one that I probably should have entered today. Nice gap up um, on the session. Canada Goose. And this is one, when it came out, it was such a hot stock. And you could see prices here, $60, $70. And it just never got back there. You never want to be long-term holding something that looks like that. But it's been looking kind of interesting of late. And it looks to me like it wants to go higher. Let's see what we got here. Look at the surprises on earnings. Look at the quarter-over-quarter growth on earnings. Look at the surprises on revenues. Trades at a very small PE. I think that one kind of looks interesting. Canada Goose. So this is what I do as a top-down investor. Baidu, boy, this used to be such a hot stock. Maybe, but it's in an overall downtrend. TSCO, is that Tractor Supply? Ooh, Tractor Supply is breaking out here. Good volume, relative strength and OBV. Seasonality is okay. I like that. And then Albertsons, which is in a takeover, not battle, because I think everybody wants it to happen, but not letting the government decide. You can see Kroger's pulling back here, but it had a nice move off the 50. And then GEV, GE Vernova, one that Praveen and I have been doing very well with. Every time it pulls into this green line, it's a nice time to buy it. It pulled into again and took off, had a big move in the markets. And look at this earnings per share growth with the last earnings set. It's expecting $1.63 versus 35. Another big, big, big move. So that's how I do top down. I take the top 2, 3, or 4 sectors, then I rank the industry groups and look at the top stocks. Now there's other things I could have done. Okay, I could have just taken, now I've got all the industry groups, many more than we had before. And I could basically have just taken maybe the top 10 industry groups. All right, uranium didn't make the prior list, but something like LEU pulling back, had a nice session in the market today. Does that mean it's going higher? CCJ is the king. Again, pull back to the 17-day and it moved higher. UUU is kind of a tiddler, a couple-day pullback. So maybe I look at the industry groups. But sometimes I just want to look at bottoms up. So I'll go to the impulse list. And this is all the stocks in the NYSE and the NASDAQ and the AMEX filtered for $1 at 100,000 shares. And right now there's 3,691 of them. Then what I do with that list is I manipulate it. So let's go in here and let's look for pullbacks in an uptrend. Price greater than 5, more than 500 volume, hit OK. Let's rank them by up dots and see if anything looks good. WNS, big gap up. The question is why? I'm massive volume. Was it earnings? Earnings are the 17th. That's 10 days, so it's not earnings. Was this one taken over today? Yep. All right, next, because we're not playing that story. KALV, a biotech stock with a big breakout. Again, you probably want to look at the news. All right, they had a drug approved, so that's interesting. That's an episodic pivot. Drug approvals are good reasons for it. That might be one to put on your list. BILI, Billy, it's an ADR, so it's very gappy. Nice move up. SAND, a lower cost gold company, breaking out here. Sandstorm, massive volume. We talked about McKesson often as one of my favorite plays if the market goes backwards, and here it is sitting in a nice base, good seasonality, breakout momentum in a CPR, relative strength and OBV crossing. That one looks good. And if that one looks good, you also have to look at Cencora, the old AmerisourceBergen. Now, why do I like these so much? Look at the weekly charts. Look at the monthly charts. Here you go. Oh my God, I sold a company to these guys in 2005, Imagine if I took all the money and just left it in their stock. They used to be called the Amerisource Bergen. You want to see something that looks just as good? How about McKesson? So these are long-term great plays to be in. The only time I wouldn't want to be them is if they start to talk seriously in this country about reducing the cost of drugs. They don't set the price; they just move them. They're logistics kings, incredible operators. Cardinal Health is the other. Dollar General, kind of basing here. CXW, private corrections company. They were profiled on TV, not positively, but talking about how they could be a place to put a lot of the deportees. So breaking out on that information, big volume, um, a gap volume, and two momentum bars in a row. We're going to come back to that. Those two momentum bars is my go-to signal. Core, Chef, Baidu. A lot of these stocks were on the top sectors and industry groups list. Another one with a similar pattern of a move up, sideways move, and looks like it's ready to run again is Toast. And you can see it's got some positive seasonality coming in, decent volume day, breakout momentum from a squeeze with relative strength and OBV. And for full disclosure, Toast is one of my bigger positions. Why is it one of my bigger positions? Have you been out to dinner lately? I grew up in the land of, I didn't own it here, of the little blue piece of ink sheet where you would make a signature, they'd throw that out, and then people would steal those pieces of paper and run up charges. Well, these guys fix that problem. Now you have it at your tabletop. So there's a number of stocks that look good from both a bottoms up and a top down perspective. Let's just finish here with my favorite search. And let's go in. Let's drop down 5 and 500 again. A 2-day momentum up and hit OK. And we're just going to finish on these and look at how many of them we've already looked at. Start with Sandstorm Gold. If you don't have gold in your portfolio, there are a number of low cost and higher cost gold stocks. Nice, beautiful breakout here. You know, obviously you're going to want to look at the fundamentals and see huge multiple. There's probably better ones. 1% dividend. LX, Lex FinTech, run up, pull back, failed, breakout. I have to see it get above that 17, so I'm not as interested. But let me go back to the daily chart, dummy. That's me, not you. And yeah, I'd still like to see it get above the 50. It's failed here multiple times, but those two momentum signals in a squeeze with good volume, I like that. We already looked at CXW and Core. ZVRA, I looked at over the weekend on this bar here because that was the second in a row. This is 3 dots, 3 momentum dots. This looks very interesting. I'd want to know what's going on with it. Bullish view at Wainwright. That was a couple days ago. Click on the link. I'm just curious would they put a price target on it. We're not going to get that. All right. Don't know anything about it, even though I'm in healthcare. Typically, though, when I see 3 days up like this, I see a little bit of a stagger before it goes higher. Well, is that Welltower? Yeah, this is one of the healthcare REITs. Probably pays a 3 to 4% dividend. Let's see, 2% because it's gone up in price. Healthcare businesses usually don't go bankrupt. And I had sold my offices to a REIT before I left practice. Toast we looked at. OR is another of the miners. Maybe a little bit nicer looking pattern. Nice uptrend pullback to the 50 and a breakout here. It's got the 2 dots. And then we looked at advanced auto parts. So there we are, 40 minutes. If I didn't have to talk to you, I'm not complaining about talking to you, it would have taken me 20 to do a really in-depth top-down review of the market, looking at timing models, rotation, the works, come up with a short list of stocks to go look at. tomorrow. Let's see what happens overnight. Let's see what happens with the tariff temper tantrums. And again, I thank you for being here. And just to remind everybody again that the tool that I use here is called Market MRI Pro. I think it's a great tool for equity traders, and it's on sale to the end of the day on July 11th. And no one will pay more than $15.99 during the sale, and it could be as low as $11.99 if you have prior purchases. Talk to you tomorrow.